And today, the bears are trying to create a double top, testing that breakout point. But the context is different. I think the context is better for the bulls. When I think a trading range is likely, I'm more inclined to scalp than to swing. I did buy, and I did get out completely, but I'm willing to buy again. So the bears now double top 3 at a resistance point, yesterday's breakout point. But the context is good enough for the bulls, and the breakout 16, follow through 17 are good enough for the bulls to make me think the market's always in long, and that we're going to get up to the trend line at a minimum. We don't have to stop there. If we get above 3, will there be a breakout? There might be, because the bears want this double top. If instead we get above the 3 high, especially 2 or 3 ticks above it, it's possible that we could go up sharply. I don't think we will. I think I said from the outset, I thought today would be mostly a trading range, and I still believe that's the case. Trading ranges constantly disappoint traders, right? Disappointed bulls, disappointed bears, disappointed bulls, disappointed bears. We got bulls again, so the market is probably going to do something soon to disappoint them. One thing it could do is create a reasonably strong bear bar on 18, making bulls wonder if this is a double top bear flag and a short, and it is. But the probability is that it will fail and that there will be buyers below 18. So my next trade is, if this reverses down very strongly, I would consider a short. I think more likely there are buyers below 17 and 18, and that will get a pullback to buy. So similar to this, 26, 27, 28, breakout, pullback. Or here, breakout above a bear channel and a pullback. Trading ranges constantly disappoint traders. So traders are constantly hoping for trends. Above 1, after 4, 5, 6, right? Above 7, then 9, 10, right? Here we get a breakout. The bulls are hoping for a trend. People are naturally hopeful, and that costs them money on days that are likely to be trading ranges. They see a bull break out near the top and they buy up there. Instead, they should be taking profits on longs. They see a strong breakout near the bottom and they sell, hoping for a bear trend. Instead, they should be taking profits on shorts and looking to buy. Right? So it's better to buy low, sell high, and scalp. 60-minute chart might become an II, breakout mode situation, but 3 pushes down, consecutive sell climaxes here, 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 very big climax here, and very, very big climax here. We could be at the start of a huge bear trend, but it's more likely that this is just consecutive sell climaxes, and now the 60-minute chart is oversold. Just like the monthly chart was way overbought, right? The 60-minute chart is now way oversold. So we'll probably start to go sideways and maybe test this double bottom over the next several days. Still always in long, second leg up likely. Targets above, the trend line especially. We broke below the bottom of a bull channel, a bear channel, and we are reversing up. And 2 chances out of 3, the market tests the top of the channel. So that's what I think the market is trying to do. What happens if we get above this double top? Do we quickly go up for a measured move? We might. That would take us near this lower high. The reason why I'm not more enthusiastic is trading range open, and now we're near the top. So you can do it for, you can buy above 20 for a swing, but the probability, I think, is not high enough for a scalp. You're buying at the top of a trading range. Minimum stop for the bulls is below 19, and then below 16, and then below 11. Might be forming a tight trading range here. Since it's not a high probability buy, is it a high probability short with a limit order, the 19 high? I don't think so. I think it's either a buy or a tight trading range, much less likely the start of a bear trend. We have a lot of bull bars closing near their highs here, so a lot of buying pressure after consecutive sell climaxes, plus we have an obvious target above. Deciding what to do with yesterday's 15 low. Do we break out and race up near here, or do we reverse down into more of a trading range? For the bears, wedge, bear flag, 3 pushes up, 9 and 17. Does not matter that 21 has not yet gone above the 17 high. I think we're always in long, so if I had to be in the market right now, I would be long. I also think that this is probably going to end up as a trading range, although the market is so oversold, we could have a bull trend. There's one measured move target that I have not drawn in, and you probably are aware of it, right? Potential at the open of the day is the middle of the day. Let me get rid of this one for the time being. So you're going to be thinking that open of the day might be the middle of the day's range, and that we could form a doji inside bar on the daily chart. So we trade down, and then we go above the open by as many ticks as we went below, and then the day closes around the open and creates a doji bar on the daily chart. All right, so it's possible that today could end up as a small doji bar on the daily chart with a close right near the open. Right now it's bullish, but there are still many hours left to the day. It's right around the trend line, which is, I think, the most reasonable target. Another profit-taking area. The target, the top of the channel, measured move, 15-minute moving average. So if you're long anything right now, I would take at least part off. Possible measuring gap above the double top. What about buying up here? The breakout of resistance, yesterday 15 low, today high of the day. Breakout above a double top. You can buy, we're always in long, so you can buy for any reason.